Bitcoin might be up $15,000 from the July low. However, it is still just falling short of a key price and time target. This is what I'm covering in today's video as we begin our journey into August. The Nasdaq has also had a couple of days down. The thing I'm looking at here is the close for July. Reason being is the last 16 Julys have been in the green for the Nasdaq 100. The last time it was in the red was basically 2007, and that was 0.5 or negative 0.5. So that was 16 years ago. Could we see the same thing again? Well, we'll find out in 9 days' time. Essentially, you need to close above 19,970. Now, how are the rest of the markets around the world looking? Well, at least in the UK, you're still holding up above the 50% level and above the old all-time highs. Sure, it hasn't made a new all-time high, but consolidation above old all-time highs is a very strong position. Now, I bring this one up because we've seen something change for gold. This is what you don't want to see when a market breaks to a new all-time high and then falls. Basically, it fails from that high. You'd want to see it consolidate above the line, not below the line. And the line is looking at the previous old all-time high. So you need to get this consolidation above those levels to show the strength is sticking around. Now, this is not the end of the day for gold. Essentially, it just means that it's probably going to consolidate for a longer period as opposed to a shorter period that if it was to sit above that high. So all we're looking at there is a sign of strength and weakness to that current market action. So basically, that move to the upside has failed and it's closed back underneath. That's what that close underneath means. That move was getting ready, didn't make it, closed underneath. Now look at the very specific points that I use in my analysis. This is understanding the tape, basically the print, and a little bit of Gann and Wyckoff here, right? So the top, that exact price. I don't use these sort of like, oh, let's just move the line down here. Let's have a look at the closing prices of the market and just give a rough guide here. Sometimes that's usable, but I don't like to do that, right? I like to do something more specific so that I can use that same rule across other markets or all other charts, right? So here is the top. Here is that big move to the upside. This one failed. And then again, it managed to get 2 closes above. But look at the third close on this day here. That one came just underneath this line. So $2,447.90. And then it continued to fall. So it only managed a couple of days close. Normally we would like to see 3 days. And there is another example that the market was not able to close 3 days above. Now, it's not a guarantee, but it just shows you that extra bit of strength. If you're going to get roughly 3 days above, there's a better chance, not a guarantee, but just a better chance that you're going to see a sustained move above that line before you can move higher. So this is all part of the experience that I've gained over the last 17 years to see those little nuances in a chart, which in the old days, 100 years ago, they called reading the tape. That's essentially part of that very detailed, subtle look at the tape as opposed to just sort of whacking lines on the chart wherever you think they should go. So that's a look at gold. What this could also show with this decline is something from Crowded Market Report. I think this is super, super interesting. What Jason has got here, this is Jason Shapiro, Crowded Market Report, is the longs and the shorts. So basically a market getting crowded. That's why he's called the business Crowded Market Report. The blues, large speculators. The reds are the commercials. So if I remove my face for a moment, you can see that the small speculators and the large speculators are all on the long side of gold. What happened to gold? Well, you got the top here, and then gold price has dropped significantly from there, and the commercials are on the short side of the market. And so you can see that the speculators are typically wrong at the extremes, not the entire move, just at the extremes. And here come the commercials who basically crush them from that point. So the lesson is try not to be on a crowded side of the market. When everyone is talking about how something has to keep going up, it's probably unlikely going to happen. That goes for all markets. Bitcoin won't be excluded from this either. That's coming our way. Not understanding price structure is also a bit of a cardinal sin when it comes to how to set your prices. And so that's what I'm looking at here with the current price action. If it were to break down from some key levels that I'll go through in just a moment, Although it would be a cheaper opportunity to buy Bitcoin, you're likely to see even cheaper prices and more likely not going to see higher prices from there. The same things happened all the way through 2023. We get this break up. So this is what we were seeing in 2023 as an example. So you basically get this nice big push higher, and then people are calling for these corrections that would take out key pivot points in the market. If that were to happen, you're not going to see a bounce back to the upside. Essentially, that is saying something has broken. Price structure has broken. It has taken out very key moments in the market. Therefore, it's going to remain down for quite a considerable amount of time. And as you might know by now, most people can't hang into a market for months on end, hoping for better times. So essentially, that leads me to what I'm looking at now with the current price action and where we would not want to see Bitcoin break underneath, especially after this particular move to the upside. So let's turn on a few lines, have a look at where we currently sit. I've got some inflows and outflows to go through, and then some news headlines for Ethereum and the ETFs, right? But essentially, Bitcoin, as I said in the intro, has gone up $15,000 from the low, and that's been 17 days. Last move to the upside was May 1st, and it went up $15,500 in 20 days. So hopefully in the next few days, Bitcoin can hit $69,000, because that would then be an equal move to the upside in time and in price. So we get a balance there. So 15.5 takes us to $69,000, almost to the dollar, and 20 days is 25th of July. If that happens, we get a nice balanced move to the upside. Great thing. We can look to any sort of correction to the downside, but we don't want to see it go below key pivot points. Now, there's a lot of pivot here, or a lot of support coming in at $59,000 to $61,000. So for a nice clean number, call it $60,000. You can see each time that Bitcoin has hit this level, it's either bounced out of it, it's sometimes has continued on, but then quickly gone back above. And in the case of the last low, it crashed through 60, consolidated, put in the little 1, 2, 1, 2 here that Michael's talked about on his channel, looking at Elliott wave, and then broke out of both of these levels. So in terms of setting any positions now, should we see a correction over the coming 1 to 2 weeks, because this has gone up now for 20 days, or sorry, 17 days. Previous moves have also done roughly 20 days. Maybe we've got this bit to look at as well. I'll get to that in just a moment. But essentially, if we were to see any sort of decline here, a move under roughly about $59,000 would probably show that Bitcoin is in a weaker position again. And everything that we've seen in regards to ETFs, Bitcoin, Trump getting into the presidency and pumping Bitcoin, any other sort of narrative has probably already been pushed into the market in terms of price, and that there is just nothing left for Bitcoin to do at this stage. So I'm suggesting here a break under 59K over the coming weeks would be very dire for Bitcoin. The point here is trying to be greedy and set targets underneath $50,000, although it could get there, would mean dire things to the price of Bitcoin. If that doesn't make sense, let me know in the comments section down below. I tried to give you a masterclass here in a very short period of time so that you can hopefully see that structure is very, very important, and just hoping for prices underneath particular psychological support levels isn't the best way to position yourself for the next stage of the cycle. Let's just have a look at the price chart. ETH BTC is still on this bit of a weak move to the downside. It's still down. We haven't seen a move and close above 5.2%, which is ideally where I'd love to see this thing get to for the bulls. So the trend is down. You have to just expect that it's going to continue down until you see a reversal. Now, the move has hit 50% of this range, so that's at least a good place to find some support. However, it needs to get back above that next 50%, and that next 50% is the major one there. That's basically the entire bull market range. So here to here, there's the top, there's the bottom, and there is your big 50% through the middle there. So that's an important one for ETH to get back above, especially with this big news announcement. Like and subscribe. See you at the next video. Till then.